What is up, traders? Welcome back to our channel, and today I'm going to give you the 3-step framework that helped me get profitable in futures trading. And I'll be breaking down every single part of this 3-step framework in detail to help you understand what it is that you should do that the majority of traders don't do, and that's why about 95+% of traders are not profitable. So consistency doesn't come from finding the perfect strategy, it comes from following a consistent process. Keep that in mind as we dive right into this right after this introduction. Remember to hit that like button, hit that subscribe button, and I'll see you guys on the other side in these screens because we're going to have to do some digging. What is up? We're back on the screens, and we're going to be talking about the 3-step framework that helps many traders, that help me actually turn the corner, and it's a very important process, right? This framework turns trading into a daily performance routine, like how athletes or pilots or chess players approach their craft to reduce randomness and actually build structure. When it comes to trading, it's the boring crap that actually makes money. It's the stuff that you don't want to do. It's the stuff that seems very mundane and routine, but that's the goal. As long as we can make it boring, consistent, we're going to make it repeatable and profitable. So the 3-step framework goes as such. First, step number 1 is preparation. Step number 2 is going to be execution. Step number 3 is going to be review. Then we'll put it all together. So preparation, I'm a firm believer in having a plan, right? Everyone's got a plan until they get punched in the face, as many have quoted Mike Tyson, but I believe failing to plan is planning to fail realistically. So a bunch of quotes there, I know, very cheesy, but the idea is to get mentally, technically, and strategically prepared before the session. The way that my strategy works and the way that my system works is that I have predetermined areas that I want to trade based on the system itself, and there's going to be a high probability of success when these things shape up. So first and foremost, we want to break down the market context. We want to identify the overall trend. We want to identify the areas to trade. We want to identify key distribution extremes. We want to take note of major events and whatnot. And then we can build a bias, right? We can build a bias for the day based on that information. And then with that, what we do is we create a plan, mark out the A+ setups, and from there, what we can do is get prepared mentally. So let's go through that fairly quickly. We want to prepare. The idea for my preparation is not only technically get prepared, but create a trade plan. Why the trade plan? The trade plan builds out a malleable bias so I know which side of the market is expected to win through which level. It also prepares me with high probability trades, meaning that before the market even opens, I can have a handful of trades that I want to take, right? That's it. So if I can understand market context, what I'm going to be looking at is, okay, overall the last few days we've been chugging along to the upside, right? Fairly easy. What I'm going to do then is I'm going to mark out where my biggest balances are here on the volume profile, the 200-day, right? You've seen me do this several times if you're watching this video. So these are going to be the main areas. We have minor areas within the balances that we may want to consider. So right away I'm looking at this and thinking, I'm looking at the ETH. So I'm looking at this session before this session actually trades. And I'm thinking, well, we're stuck between these two balances. Realistically, best case scenario for the buy side is that we expand through 67.40 on the S&P. The low band is 40 to 42. We expand through that area, and that's where we want to hold support structure. And as long as we move through the minor areas within, for instance, this low 60, because this is a developing balance, you can see the weekly profile here, then I have another opportunity for the long side. So I can come up with 3 trades there right away, right? Number 1 is wait for the expansion into the balance, and I want to be a buyer at 40 to 42. Number 2, I can fade, right, and go counter trend at that 62 because there's the expectancy that there's going to be some kind of failure there. Number 3, I can wait for this area to go bid and I can buy 62, right? That's all I have to do. Those are the only trades that I need on the day, right? And there's only 2 levels there. There's only 2 levels that I'm trying to trade. Right? I can look at this and say, well, there's going to be malleability in the bias because if we start crashing under 67.20, okay, we have a different plan. So that way, I already know I have this planned out. I want to stick it somewhere that I can see. So that's exactly what I want to do. I want to identify the key areas. Those key areas don't change. I want to identify the trades that I want to take, and I want to force myself pretty much to wait for those trades to set up, and then I can start looking at the next part of things. So I've created a plan, and then I want to create a mental prep, right? Mental checklist before I start trading. Am I calm and focused? Am I watching what's going on? Do I understand that I have only 3 trade setups to actually take, right? Am I emotionally distracted, distraught? Is there anything that has any outside influence? Did I just take a trade and I'm feeling emotional attachment to it? I want to understand that every individual trade is going to be its own entity and I can't attach prior trades to that, right? It just doesn't make sense. At the end of the prep, mental prep, right, you want to say, I'm prepared. My job is not to predict. I just want to react with discipline and I want to take the trades that are in plan. That's all I have to do, right? It's very simple to actually create a plan and have trade setups and whatnot. The hard part is the execution, right? Are you going to execute the plan? Which is step number 2, right? In this framework, step number 2 is actually executing. So execute your plan without hesitation, emotion, or improvisation. The hardest part about trading is not finding setups. It's not taking trades. It's not finding good setups. The hardest part is waiting until your good setup actually comes and taking that. So when I break that down, right, it's just going to come down to discipline. Execution is all about discipline. It's always going to be about discipline, following your process in real time. So I want to break down, right? I want to wait for the area to trade. I want to wait for whatever confirmation takes place. So if I'm looking at the market from today, right, this is the auction low around here, low 40s. This is that low 60 we were talking about. And those are the 2 only areas that I need to trade on the S&P. We get an expansion higher and we pull back, and there's absorption over here. I don't take this trade, right? I'm not in this trade. But the idea is I want to wait for prices to come back into that area. So if I'm not short here initially, theoretically I'm waiting for a 20-point drop, but that's okay because I'm going to wait for confirmation. Wait for your confirmation. Be patient. Don't chase price. Wait until you come into the area, as long as you're trading within that area. One of my pieces of confirmations, I need to be in the area, and it needs to be the first time in that session that we actually test that area. If we haven't made new highs or new lows in the direction, it needs to be the first time. Then I want to enter, right? I want to execute based on the entry. I want to follow the exact rules that I have based on that. So rule number 1, we have to be in the spot. Rule number 2 is their absorption. So you can see the red bars over here. There is absorption indeed, right? Rule number 3, is there going to be any buy side pressure, meaning quick rejections from that absorption? Yes, okay, there are rotations, there's buy side, we can look at the footprint maybe, great. It's this trade all over again. We come back into the same spot and we start failing. We come into the area, there's absorption, there's sell side. Okay, let me take the short. Fair enough. It works out just like the long. We get the expansion above the 62. What did we say the plan was? If we continue on moving into distributions higher, I want to get long on that continuation. So we pull back. We have a nice area of positive delta here. After failing so many times, all this absorption pushes higher, meaning the buyer is strong. I want to enter. I see absorption again into that big blue positive delta block. I want to enter the long, right? Follow those steps and only enter based on the criteria that you have set out. Like I said, this is going to be the hardest part, but that's okay because we're not robots. We have slip-ups. That's where the third step of the framework comes into play. I want to obviously manage risk. When I'm getting in this trade, I need to know my size. I need to know my targets so that I can just execute flawlessly. I'm not going to get into a trade and say, okay, I'm just going to let it run until whenever, right? This is either going to the moon or going to zero. You want to be aware of where there is going to be support resistance that might go against the actual trade and your profit. You want to be very emotionally aware during the execution as well, right? Note how you feel. Maybe before you even get in the trade, you start tensing up and you're like, holy crap, I'm nervous. That's probably not a trade that you want to take. If you're nervous in the middle of the trade, that's probably not a trade that you want to take, right? You want to know how you're feeling. Are you anxious, impatient, overconfident? The awareness prevents impulsive mistakes, right? Impatience especially. If you see markets reacting and they start going up or down aggressive, you're like, shit, I need to get in. Right away, disqualification in a trade. Obviously, you want to avoid distractions, right? No switching strategies mid-trade, no flipping back and forth, no revenge trading, no overanalyzing social media opinions, blah, 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 all that crap, right? My edge plays out over time, not one trade. That's one thing that I think everyone needs to understand. So many people get so absorbed in the idea of trades defining them, right? The profitability of trades defining them, their trades defining other trades as well. What I mean by that is if I take a loss today on the first trade, everyone's like, oh, okay, well, that trade makes me kind of feel like an idiot, a loser. I need to make it back. So they have that first loss in mind when they're taking more trades, or even that first win. Every trade needs to be individual. So when you're execution wise, you need to be very sharp. You need to understand what your rules are, what your confirmation is. I gave you a breakdown of some of those rules. And like I said, not everyone's a robot. This final step of the framework is what really just changed everything for me. And this is the aspect that I think no one wants to do or people shy away from the most. Review, right? Every trade, every move you take is data and it's feedback. The best educator in the market is going to be your own trading. It's going to be your journal, right? The growth phase where you build insight and refine your edge is going to be the feedback that you get from the trades, good or bad. Review these trades and make sure that you understand what it is that you're doing exactly. At the end of the day, you want to have a journal, right? You want to log your entries, exits, screenshots, reasoning, your emotional state. For example, right, the setup type. Is this a fade? Is this counter trend? Is this a pullback onside with the trend? The level of confidence, the outcome, right? Win-loss R multiple, the emotional rating, 1 to 10, 10 being the most calm, serene monk you've ever been, right? You want to break those down every single day. I would even go as far as doing it after every single trade, because realistically, I'm not going into trades back to back to back to back, trying to fish out some like 20, 30 trades on a day-to-day basis. It splits up the time between trades. It allows me to review, see where I'm at, and it gives me a mental reset as to what the market is doing at that time, right? You also want to look into pattern recognition when you're doing this review. You need to be doing weekly journal reviews, monthly journal reviews. Which setups perform the best? Out of the 20, 30, 40 trades you took this week, they need to be, or month, whatever it is, probably month, right? 40 trades a week, it might be a bit much, but let's say the 100 trades you took this month, right? You want to divide them into different setups. You shouldn't have like 1,000 different setups. 2, 3, 4 setups is fine. Which setup performs the best, right? Which time of day produces the most wins, losses? What emotions correlate with mistakes? Those things you need to break down. And then you want to refine the playbook. Remove weak setups, right? Double down on the strong ones. Your goal in trading is not improving your weaknesses. It's really pushing on your strengths and trying to just like push aside the weaknesses overall. So, for instance, right, I'm usually better off later in the afternoon. So, after about 10 to 10:30 a.m. Eastern time, right, that's usually when my better trades come to be. So, I want to focus on those times. I want to focus when there's more data in the market, when I can see more moves of absorption, right? When I can see more of the profile on the day, whatever the case may be. You want to also have mindset reflection. Ask, did I follow my plan today? Extremely important. Like I said, step 2 obviously is going to be execution. That's going to be following your plan. But we're not robots. We're not going to do this all the time, every single time. So, with that being said, this review and the feedback loop is imperative so that you start executing more so to plan, because you start beating this into your head, you start repeating it over and over and over again. When I see it over and over again, now I know, okay, I've just reviewed this, I've done this yesterday, let me make it better. The goal isn't perfection, it's process consistency, right? I didn't win or lose trades, I collected feedback and we get better and we progress over and over again. That is what journaling does. That's what review does. And that review aspect of this 3-step framework was the full-on game changer. Not many people like to do it, but realistically, that's what's going to really change the way that you trade, and it's really going to give you the progress that you want to see. So when we put it all together, right, we want to prepare. It builds clarity and readiness. we do it pre-market, we look at a clear bias or plan, and then we execute, right? The second part of the framework is execution. Trade the plan with discipline. We want to obviously do it during the session, and we want consistent behavior to create something repeatable. The final step of the framework is review. The most important, probably. Turn these results into insight. You do this post-market, after your trades even, and it's continuous improvement. So these three aspects, I think that if you can zero down on them, you can really improve your trading and actually see progress. Specifically the last point. If you need help with part 1 and part 2, step 1 and step 2, check us out at community.tradeproacademy.com. Our free Discord there is chock full of resources, and we have a lot of information. You can chat with me and get a better understanding of how you can improve your system and your setup. So I want to welcome you guys to TradePro Academy. I'll see you guys soon. And remember to hit that like button and subscribe button.